The Series LLC is a powerful business structure that allows entrepreneurs to create multiple protected cells under one parent company. In Illinois, this innovative legal entity offers asset protection and cost efficiency, but requires careful formation and compliance. A Series LLC allows for multiple separate business units or cells under one parent LLC, with each cell insulated from the liabilities of the others. Think of it as creating separate compartments within one business vessel, each watertight and protected from problems in other areas. Illinois permits Series LLCs under the Limited Liability Company Act, specifically Section 805, ILCS 180/37-40. Unlike standard LLCs, a Series LLC in Illinois requires specific language in your formation documents that enables the series structure. The concept originated in Delaware, but has distinct requirements in Illinois. While Delaware allows for more privacy, Illinois mandates public filing for a Series LLC, including articles of organization that explicitly authorize the series structure. For each series you create in Illinois, you must file a certificate of designation with the Secretary of State and pay a $75 filing fee. This is different from Delaware, where additional series can be created without public filings. To maintain the liability protection between series, each must operate as a truly separate entity. This means maintaining separate books and records, distinct bank accounts, and clear accounting practices for each series. Commingling assets between series can jeopardize your liability protection. The operating agreement is the cornerstone of your Series LLC structure. This document must explicitly govern the internal affairs and liability protection of each series. It should outline how series are formed, amended, or dissolved, and establish the powers and duties of each series. Your operating agreement should also address the allocation of profits and losses per series, management structure for each series, and procedures for maintaining asset segregation. Unlike standard LLC agreements, a Series LLC operating agreement requires additional detail and precision. Each series should have its own bank account and ideally its own tax ID number, or EIN. If a series purchases real estate, the deed must be in the name of that individual series. The same applies to contracts, notes, and loans. To maintain clear separation, transactions between series should be treated as if they were with outside entities. Any loan transactions between series should be interest-bearing and well documented. Each series must have sufficient capital to support its business independently. Illinois imposes ongoing compliance requirements, including an annual report and a $75 fee for each series. Each series must also include the name of the parent LLC in its title and distinguish itself clearly, often using a DBA or doing business as name. Despite their advantages, Series LLCs face some challenges. Not all states recognize the liability protections afforded by a Series LLC. If your business operates in multiple states, those jurisdictions may treat all series as part of the parent LLC, potentially exposing assets to cross-series liability. The tax treatment for individual series also presents some complexity. While the IRS allows each series to file separately, there remains ambiguity about reporting requirements when series have different tax elections. Managing separate books, accounts, and filings for each series requires rigorous compliance practices and can become administratively complex. Because Series LLCs are relatively new structures, they may face increased scrutiny in litigation, especially if proper separation isn't maintained. Series LLCs offer significant cost savings compared to forming multiple separate LLCs. With a traditional approach, each LLC would require its own formation fees, registered agent fees, and annual franchise taxes. A Series LLC consolidates these expenses while maintaining liability protection between business units. For Illinois entrepreneurs with multiple properties, business ventures, or investment portfolios, the Series LLC structure offers an elegant solution to compartmentalize risk while streamlining administration. However, this structure requires detailed planning, careful documentation, and ongoing compliance to preserve its benefits. The Series LLC represents a sophisticated legal tool that, when properly implemented, provides both protection and efficiency for complex business operations. Understanding the Illinois-specific requirements ensures your business structure remains compliant and protected.